Everything is good to go here, so we're going to wrap things up and go through the 68th newsletter. Today's was titled The Curious Case of Financial Engineering, and we'll get into it more and we'll explain what we're actually looking at here. But before we do, I think it might make sense to run through the market and just see what's going on. Quite frankly, I don't look at the market anymore because putting together the newsletter takes a lot out of the day. And I used to trade a lot. I used to actually, I used to come home from work and I'd stare at charts, teach myself how to do TA, look at other people in the community, and I would do that until 2 or 3 a.m. And just really haven't had the time to do that as much, which is good because, there's only so many hours you can spend staring at charts. I think you're much better off reading about coins, learning about projects, and kind of keeping a tab on what's going on in the community. So just looking over at the market cap real quick, we're still trending down from January, it looks like. And also, if anyone's unfamiliar with CoinMarketCap, it's a really great resource if you're trying to understand like how coins are priced, what the volume is looking at, the 24-hour volume also. I remember it when it was around $42 billion or so a day. So it really has dropped pretty severely, and that has to do with the fact that right now we're in a downtrend, and not many people are trying to trade these markets right now because the speculators are mostly gone. Anyone who's really in the market right now are either people who wanted to dump their bags at the top and weren't able to dump their bags, or are people that the market could go down another 50%, 60%, and they're still going to hold on to their cryptos because these are the people that believe in the technology, believe in the projects that they're holding. So however far the market drops, it doesn't really matter to them. These people are in long term. Their outlook isn't going to be judged week by week, and any changes in prices aren't really going to be impacted by that. So again, looking at the market cap here, we're trending upwards now, but again, we've seen this before at these levels in the beginning of February. So again, until we get a clear break of a downtrend line, which I would show on a chart, but for some reason TradingView isn't working. But until there's a clear break of the long-term trend line, until then we're pretty much bearish, and it's dangerous to trade in these areas for the most part. And again, this is just my opinion. This isn't financial advice. If anyone has been looking at other cryptocurrency videos, that's very common. These are just opinions that we're giving here. I'm not suggesting anybody trade off of this. And again, Bitcoin's market cap, or Bitcoin's dominance, has been going up a lot. It really hasn't broken. It got as low as 34%, and then started to shoot back up. What was around February 9th? The G20 summit was just the other day. But yeah, when the market kind of flattened out, I guess that shook out a bunch of people with altcoins, and everybody is most likely retreating to Bitcoin just because, Bitcoin's what you know. Speculative traders, again, since they're not in here anymore, people are going to return to a coin that they're familiar with, and Bitcoin's the most familiar of them all, so why not that? Alright, well, enough of price. Let's hop into the PowerPoint that we put together today. And again, this has to do with Abra and what they're rolling out in 2 weeks, but we'll get more into that. I'll try to make the title have to do with the top story. Make it a little entertaining. But anyways, this is our table of contents for the day. We have our tweet of the day, word on the street, the top 2 stories, or at least the 2 relevant stories we thought would be helpful for you guys to get a glimpse of. Whereas blockchain, we're looking at a blockchain project in the space. Today we're taking a look at Uber and their recent expose in the paper and how blockchain may provide them a solution. What else you should read today? Just tiny tidbit articles, stuff that's important, but again, we just wanted to put that out there for you. Bulls and bears, think macro, not micro. A lot of people in the space are bullish. We're going to look at why they are. And there's no such thing as free money. And we're going to look at an incident with Coinbase and how in that case there actually was free money if you knew where to look for it. And wrapping up with our educational piece for the day, which looks at the Howey Test and how to identify what what tokens are securities and how to classify tokens as securities. So, tweet of the day. This comes from Satoshi Light, Charlie Lee. I guess yesterday was World Poetry Day, so Charlie put out a poem for us, a haiku. World Poetry Day. Can't think of a good haiku. Oh well, life goes on. So I threw one back right at him. The Daily Bit News. We make crypto fun to read. At least we think so. So again, we think it's fun. If you guys think it isn't great, let us know. If you think it is great, then great. We think so. So moving on. All right, word on the street. We're starting with Abra, and Abra, most people know, is a Pokemon. It is also leads a double life as an online trading platform or an online money payment service that offers cryptocurrency trading. And Abra joins a bunch of other companies: Coinbase, Square, Revolut, Robinhood, and Circle. All of these applications and these companies they offer trading apps that you can download on your phone. You can trade cryptos on them. Some, like Robinhood, just rolled out recently, got a lot of hype in the news. They had over 1 million people on the waiting list at one point, and Robinhood has something unique where they offer free trading. Feeless trading for both their equities. I'm not sure if they have ETFs, but Robinhood has incentives. Circle has unique offerings as well. They just acquired Poloniex Exchange. Square, again, they have their Cash App. Revolut, they were in the news, I believe, in January or February, talking about their product they're launching. And then everybody knows Coinbase. They have their app where you can trade Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. And again, there are a lot of platforms out there. That isn't the entire set of projects in the space. But again, in the long term, what you're going to look at and what you're going to want to find for the successful projects are going to be the ones that have unique value-add features that they offer to the market. It doesn't matter if you have, we'll get into this very, very soon, but it doesn't matter if you offer 70 different types of currencies if your security is awful, if the fees are outrageous, and if it's slow and if it's buggy. You have to have good software, you have to have good features, and you need the whole package in order for people to actually want to subscribe to your platform, use your service, and then also not bail and go somewhere else and just abandon ship. And again, Abra has a new release coming out in 2 weeks. They're adding Litecoin smart contracts to their platform to go along with Bitcoin smart contracts. And we'll get into that more, but there's a lot of, I think, positivity around this news, just from my opinion, and we'll look at why that is right now. Just flashing back to the company's history, they were launched in early 2015 by Bill Barhydt. He's the founder and CEO, and his resume, just looking at his trainer profile, because it's Abra, of course, Barhydt has really done it all. He's been a research engineer at NASA and the CIA. He was a senior analyst at Goldman Sachs, senior editor at Netscape. They were acquired by AOL. President and CEO of WebCentric. They produced, I believe, the first web-based streaming service, and WebMD uses their service too. And he gave the first ever TED Talk on Bitcoin in 2012. Bill was on CNBC the other day, and he mentioned that he was even mining Bitcoin when it was $1, $2. So for a guy to be at the helm of a company that is in the mobile payment space, to have been around the technology for so long and having kind of that the background that he does with security and systems is pretty solid. So definitely a lot going on there. And again, the ace in the hole for Abra is what we call these synthetic currencies, and it's a financially engineered product that, if you want to get more granular with it, it has to do with multi-sign contracts that, I'd say multi-sig, that lock in exchange rates when they're executed. So let's say that, and also everything is priced in Bitcoin right now. They use Bitcoin smart contracts. So if you were to transfer US dollars in from a bank account, their product will convert that US dollars into a a fixated Bitcoin rate at the time. So let's say Bitcoin was trading at $10,000 and I deposited 5,000 USD into Abra. Their mechanical system, whatever, would crank out whatever numbers it was, and I would have 0.5 BTC in my wallet. So again, what these synthetic currencies do, they provide investment exposure to other assets without having to hold the product. And this is something that's really unique. Whereas Coinbase, again, we mentioned that they have 4 currencies on there right now, and Brian Armstrong is the CEO of Coinbase. He's talking about adding other altcoins to the platform, but the thing is with Coinbase, they hold another unique thing about Coinbase is that they have, I believe it's their security is custodial, or they have a custodial wallet. And if I mispronunciated that or misinterpreted the actually how it's relayed, my apologies. But the point is, Coinbase retains all private keys on the platform. So if they get hacked, then all of your cryptos are up to be lost. Whereas with Abra, they have non-custody or non-custodial ownership over with their securities. So your private keys are retained on your phone. So let's say there are 2 million people using Abra. For a hacker to completely liquidate all the funds that that Abra manages, they would have to break into 2 million individual wallets and get everybody's private keys. So there's a lot more. There's more enhanced security here. But again, going back to the investment exposure, this is really interesting because Coinbase, if they wanted to add on other cryptocurrencies, there's a lot more loopholes that they have, or not loopholes. There's a lot more hurdles that they have to jump over in order to get a security listed on Coinbase. But these synthetic currencies with Abra, it's a lot simpler process. It's just converted into, you lock in an exchange rate if you wanted to buy, let's say Stellar Lumens is offered on the platform. If you wanted to buy that based on the current exchange rate with Bitcoin, it's locked in right away, and your Bitcoin is basically just exposed to that through a market making agreement that Abra currently runs. So basically, again, like you get the exposure whenever you want to quote unquote cash out. They would lock in an exchange rate at that time, and then if you're up, then you're in the money. You will get more Bitcoin at the end of the day. If you lose, then that deduction between the difference of the exchange rates would be removed from your account. So again, it's a lot simpler, it's a lot smoother, and that's how they're able to, as we'll see, offer many, many more cryptocurrencies than these other platforms. And again, we just talked about this. Litecoin smart contracts are coming onto the platform in the next 2 weeks, and Barhide mentioned that, quote-unquote, in a blog post, we believe that Litecoin is the best choice today for these contracts. And the reason he thinks that is during their, I guess, review process to see what types of smart contracts they wanted to bring onto the platform, there were 5 criteria. Number 1, it has to be secure. 2, has to be safe. Has to be scalable, both on-chain and off-chain. Low mining fees. They want to make sure that they can keep those spreads tight with any expenses they have to incur. And then number 5, it has to, ideally would adhere to the Bitcoin roadmap, just because Bitcoin smart contracts are already on the platform. It would be more difficult to, again, there's more steps, there's more homework to be done if you don't have a derivative of Bitcoin. And Litecoin is a byproduct of the Bitcoin blockchain, so it makes sense that they would look to Bitcoin to implement on their platform. And again, Abra has non-custodial wallets, so users, you can take control of your private keys. And they offer 70 unique currencies due to the synthetic currencies that they're able to create with this financial engineering. So there's 20 cryptos and 50 fiat offerings. And I mean, they're the only exchange or application that can do this. So Abra clearly stands out from the crowd here. I think this is massive compared to 20 cryptos where you get the same exposure. There's no risk because they go through this hedging process with their partners at other exchanges. So there's very little risk to work on Abra. There's no fees. There's instantaneous transactions. I think it's a really great advantage that they have here. And once Litecoin smart contracts come onto the platform, it's only going to increase. It's only going to set them away from these competitors in the space. So, I mean, just something to keep in mind. if you're looking for a platform to use. And again, Abra's got to trade them all. They have 20. They have 20 cryptocurrencies, and of course they have good old Doge at the end too. So again, there's a lot more. There's many more opportunities for you to technically diversify your portfolio. Granted, again, it's only in Bitcoin, but as long as you keep those trades open, you're going to. It's basically like you're holding the asset, except you're not holding the underlying. So it's a really unique thing that they have going on there. I haven't been trading recently because the paper and all the content that we've been trying to bang out has been taking up a lot of my time. I would love to get more involved. But again, just if anybody is looking for a simple app and doesn't want to go through the hassle of signing up at Bittrex, Binance, which I think they actually just came into some heat. I saw that when I was putting together the PowerPoint. They might be in trouble for what, I'm not entirely sure. I'll definitely take a look at that after. But again, this would be something that does offer more exposure if anybody's interested. Moving on. So we're moving on to Google, and here Google, they're searching for answers with blockchain. Sridhar Ramaswamy, again, if I mispronunciated there, my apologies, but Ramaswamy is a Senior VP of Ads and Commerce, and recently stated that a small team is researching blockchain. Nothing major, and at the time, it's super early. They're not really sure if they're going to add blockchain right now. They don't know if any of the research that they've been doing is going to be valuable, but again, they're definitely taking a look into it, which makes sense. I mean, other companies are doing the same. It would be foolish for Google not to. It only makes sense for them to go this route. And again, if Google is really going to take blockchain seriously and looking to implement it, I personally think that doing blockchain-based advertisements would be the way to go. I mean, just looking at their revenue. Alphabet's their parent company, and 84% of Alphabet's total revenue in 2017 came from Google's ad business. And on top of that, Google's market share for the U.S. alone in the digital ad space was estimated at around 42% in 2017. So, I mean, if you're looking to improve your current operating system, your infrastructure, to what I'd expect is to monetize it. I mean, advertisements are going to be the way to go. And just looking at the advertising industry, it's pretty ugly. They're due for a makeover. There's a lot of problems going on with digital advertisements right now. For one, I mean, there's a lot of automated programs that are kind of like moving these advertisements or these advertising requests through systems. So those are handled by bots. And then when these advertisers are coming back to these companies and saying, hey, look, like I just put out $50,000 in advertising. Can you tell me where that goes? And they say this. It's not great. They're kind of they're stuck between a rock and a hard place. They don't know where their money's going, what's valuable, what advertisements are working. So there's more confusion there. And on top of that, these advertising bots are also going to click on ad campaigns. Click-through rates are impacted by bots, and again, that's just you're putting money into a blender when bots are clicking on your ads. You don't want that. You want real human interactions, and more importantly, people that are within your target demographic. So again, this is fine. It's not fine. It's kind of a nightmare. And Mark Pritchard, the CEO of Procter & Gamble, commenting on the media supply chain, it's murky at best, fraudulent at worst. There's a lot of stuff that has to be changed here, and blockchain is a way to do it. Moving on. So again, other companies are already looking into R&D for the advertising space, specifically with blockchain. AdRealm, they're a blockchain-driven digital advertising company, and they just partnered with UPLTV. I believe they're a mobile platform that monetizes advertisements primarily for the gaming industry, but UPLTV just got about $10 million in funding from a slew of investors. And AdRealm, they're also backed by several institutions. If you want to take a look at what those institutions are, I believe we have the link in our newsletter if you want to take a look at that later. AT&T, they're working on an advertising tool audit. believe they're about halfway through, and if that goes well, then they're going to have a better idea of what they want to do forward if they want to keep up their program. But ultimately, this is to help them understand where their advertising dollars are going and just helping their clients with their advertising in the space. And also Truth, they're a blockchain-driven global media company. They're looking at smart contracts, looking to clear up the space. But ultimately, all these companies are doing the same thing. They want to clear things up. They want to kind of, I don't know, blow away the fog, for lack of a better word, about what's going on here. It's kind of a nightmare, and they want to change that. But fortunately for Google, even though they're kind of not sure what they're doing with blockchain yet for advertising, they have experience in the space. They're invested in 6 blockchain companies right now, at least from the period of 2012 to October 3rd. This data was pulled from CNBC Insights, CBS or CNBC. Don't call me. And sorry for the one that didn't pull this data. But again, in the top 5, Goldman Sachs, of course, made the list, and these are just for corporate investors. But Overstock, Patrick Byrne, is a huge fan of blockchain. I think they implemented Bitcoin payments as early as, if not 2011, 2014, or 2012. So again, I mean, the point is they've been in Bitcoin for a while and crypto for a while. And SBI Holdings, I believe they're a Japanese bank, very interested in blockchain as well. So Google knows what they're doing. They know their lay of the landscape. So if they find something and when they find something, it's not a matter of if, it's a matter of when. They have good advisors to invest in the correct products. Moving on. Where's blockchain? And here, who to blame, I or robot? Uber obviously had a bit of a PR nightmare. They had some bad press. One of their autonomously driven vehicles, or their autonomous vehicles, hit a pedestrian in Arizona. Unfortunately, the woman died. And there's been a lot of controversy. Uber pulled their vehicles from the roads, said they're going to look into it. They apologized to the family, but I mean, this is about as bad as it gets. And despite that, people are looking at autonomous vehicles, and there's a lot of hope for autonomous vehicles. They're super innovative, and it always seems logical that that's the next step in, I guess, the technological revolution. And for many reasons, this data was pulled from Futurism, I believe. But again, there's more to go here. You can add a couple more tallies, but there's less traffic. There's an increase in safety. There's more free time. You don't have to worry about the road. You can read a book. You can talk to your friends. You can do homework. You can write a PowerPoint for the daily bit in the car. And again, better transport. Cars are believed to be better drivers than people, and Uber even had this great diagram to explain why their self-driving cars were going to be better. But clearly, it's a little more complicated than that. Even though it's supposed to eliminate human error, be a lot more convenient for people, is it really? When these accidents are going to happen, I mean, people unfortunately are going to die, are going to get hit by cars, even if a human isn't behind the wheel. It doesn't matter if you have the top-notch AI. It doesn't matter if, I mean, it really comes down to AI. Like whatever it is. Stuff just happens in life, and I mean, it's upsetting to think about. But I mean, in terms of all the moving parts around here, there's so many ifs, ands, or buts. To say that there aren't going to be instances where people are not going to get hit by self-driving cars in the future. So again, it stinks, and maybe they were released too early. Maybe the AI was messed up. Maybe it wouldn't have happened if a human was behind the wheel. I mean. Again, who knows? It happened, and Uber's dealing with the backlash of it right now. So that's really all they can say there, and try to help it out. And again, we'll get into this theory later, but who's to blame? There could be many people. And again, this is entirely this whole kind of clue game we have going on here. Like, was it the auto manufacturer? Like, was it the software provider? Was it the service technician? Like, who caused the crash at the end of the day? With AI and automated driving, it could be anybody. The vehicle owner could have not filled up a tire and hit a patch of black ice, and it skids and, I don't know, hits anything. The auto manufacturer could have tinkered with the tech or anything, fuselage. I don't know. I'm not a car guy, so I can't really go in on that. But again, there's a lot of people that you can blame. So it's really like a guessing game at this point. But we need actual hard data. This is real life. These are real people. You have to understand that it's not a board game. You got to understand. We need a system in place to understand who is susceptible and liable for blame in the event of a lawsuit when people are looking at the aftermath of a crash and saying, what is going on here? Who do we blame? And for that, Raja Jerdak, he's a senior principal research scientist at CSIRO. He proposed this blockchain-based liability attribution, or a blockchain-based framework that basically, he says, Jerdak says, blockchain technology can ensure there's untampered evidence of the conditions of an accident to inform decisions about liability. And he's completely right. And Jerdak proposes that if we store tamper-free sensory data, and you can have that all over the cars. There's something really cool with boats too, and I don't want to go off on too far of a tangent, but the sensory data that you can put on the hulls of boats can record the direction of currents, the temperature of the water, and a lot of other just variables and components about the environment that you really would never guess until you actually go into the weeds and read about this stuff. So again, if you put the sensory data around the car and also have a recording of all the interactions with the vehicle, so any of these bongaloons don't go into the car, and if they were at fault, can't tamper with any of the data, then we actually find ourselves with a system where we can actually track what's going on at all times and kind of formulate an idea of who would be liable in the event of a lawsuit down the road. So again, Uber's still kind of licking their wounds and figuring out how to make this better for pedestrians, for the community, for people that are buying these cars. But blockchain, this is something that I saw was a pretty interesting solution for self-driving cars. And again, as boats get automated, as planes maybe get automated in the future, I don't know, that might take a little more convincing to have actual passengers in there. Or maybe not, who knows. But again, blockchain is the future, at least people think, with keeping these database systems safe and secure, mutable, public, and people are going to be happy with that. What else you should read today? Google, Uber, and other top companies are using Bitwage to pay employees in Bitcoin and other currencies. This is a cool concept that I came across. The U.S. Navy also uses it. The World Health Organization uses it. This platform basically allows you to, well, if you're a worker and you want to get paid in cryptos or fiat or whatever it is, you have to sign up with Bitwage. And they partnered with, I believe the company is called Uphold to, it just goes along with the whole cryptocurrency spiel, what's going on here. But you can get paid in cryptos, which is kind of neat. Washington State's Chelan County, they're no longer processing cryptocurrency mining applications. They initially were all buddy-buddy with Bitcoin, with cryptocurrency miners, as is a lot of these cities around the world. I believe news came out about a city in Alberta that, in the country of Alberta, that was very, very open to having these Bitcoin miners come in, because when you look at it, they boost the economy. A lot of these states and towns aren't doing as well as they hope to. They have cheap electricity. The environment is cold enough where these cryptocurrency miners could come in and they're like, hey, look, this is a natural refrigerator for us. This is going to be really helpful for us when we're trying to cool off our systems, when we're cranking out these absurd amounts of electricity that we're going to pay for and pay you for to use. So, I mean, it's kind of a win-win for these towns, but Chelan County, they're realizing that they didn't really think about the environmental impact. Some citizens of the town probably aren't too pleased, so for now, they're going to put a hodl on that and just wait for kind of a better idea of how to move forward. An options trader. The CFTC has been trying to summons this guy for who knows how long, but he was, I guess, tried for investment fraud back in January, and he's just been dodging left and right, weaving in and out of these summons papers. And as the CFTC tries to bring more people to court, his name is Dean Michael Dillon, or Dillon Michael Dean. But the thing is, he's just been trying to avoid getting out of jail. So, I mean, respect it. But it's not Monopoly, so good luck trying to have that last for any time. Kodak Coin, their ICO is still on. I personally think this is a total fraud. Um, Kodak didn't really know what they were doing when they got into this. They put out this kind of silly proposal for these people that would rent out these cryptocurrency miners, and I mean, at the end of the day, it really wasn't. Somebody crunched the numbers. I forget who it was, but after a year, people were in the hole even after they rented it out. So they didn't look profitable. And Kodak kind of looked at. It looked like they just kind of came into the blockchain space in the middle of the hype zone. So again, I would, if you're an accredited investor and you're looking to get into the Kodak Coin ICO, really take a look at this and understand if this is going to be profitable and worth your time, worth your money, and worth the stress. Because again, the other thing about ICOs that a lot of people don't think about is you're living the life of a VC. 99% of these are going to go belly up, and the 1% that do are going to be super successful. But normally that risk is limited to venture capitalists that are able to take on that risk. They have the funds, and they're not just like a mom and pop retail investor that may be completely in over their heads and they don't know why they're in over their heads. So just be careful. I found this cool opinion article on the central bank bubble. I forget who wrote this. I believe the website is called Gold Telegraph, but I scrolled through the article, took a look at it. It just shows basically how quantitative easing is expanding the fiat bubble that is the U.S. banking system. So again, if you're into that, if you want to kind of understand how the monetary system works a little more, it's a cool read. And wrapping up, Andreessen Horowitz and Union Square Ventures, they led a $12 million funding round for CryptoKitties. For anybody that doesn't know what CryptoKitties are, it's an Ethereum-based game. It runs on the Ethereum blockchain. And basically, you can trade these cats for money amongst users. You can build them up. You can buy them things. I'm pretty sure. I don't have CryptoKitties, but it's like a blockchain-based Tamagotchi. Basically, I don't think they clunk, so it's different in that sense. And I don't know if you feed them. I really haven't looked into it. But again, these are games that are the transactions are being recorded on the Ethereum blockchain. So it's more importantly just shows that it's a proof of concept that gaming is coming to the blockchain, and you can actually transfer legitimate value on the blockchain. CryptoKitties, it's a video game. People think it's valuable, and because of that, like Andreessen Horowitz and all these other VCs and investors are buying into it. So I mean, this is something to really look into. CryptoKitties have only been around for a couple months, so I mean, to see where we are in 2 years, I personally think esports with maybe Engine Coin could be a contender there. But transferring value across these esports companies and their loyalty programs and just recording all the transactions there to, I don't know, maybe buy, all these in-app purchases. Maybe these in-app purchases on the App Store suddenly get a coin in the future, and instead of US dollars, it all goes onto the blockchain. Again, who knows? But like, if there's really clear use cases here, and CryptoKitties just shows that there actually are. So again, just very cool to look at and kind of see that develop. Going on with bulls and bears, think macro, not micro. Jack Dorsey, he is a legend for, by all means, he's the CEO and also co-founder of Twitter and Square. And Jack thinks that in 10 years, maybe less, the world's going to have a single currency, and Bitcoin is going to be that currency. Again, you could say, to play devil's advocate, well, Jack is very involved in Bitcoin. Obviously, he's going to say something like this. Like, why wouldn't he? It would be dumb if he didn't double down and say this. Sure, yeah, he says that, but Jack's a smart guy. And there's going to be people on two sides of the ball here that are saying, Bitcoin's going to take over everything. Bitcoin's not going to take over everything. Like, they can go squabble back and forth for however long. But Jack here, his outlook isn't getting caught up in the price action that is kind of short-term movements that are kind of driving people that are traders and not familiar with the space. Kind of crazy, and also anyone who invested more than they're able to lose, just off the wall. He's kind of looking up, looking out of the weeds, and just looking towards the horizon, long-term macro outlook. Something that he can tweet about in 10 years and say, hey, I thought this could happen. It turns out it is. Again, macro, macro, macro. And again, Yi Gang, the newly appointed head of China's central bank, said, and again, this is huge in itself too. Gang was quoted as saying, "Bitcoin is a currency that provides freedom to anybody that uses it." The PBOC has been bashing Bitcoin, banning blockchain, banning ICOs from the country, banning foreign exchanges since beyond October of 2017. That news is huge. The head of China's central bank is acknowledging that Bitcoin provides financial freedom. I mean, that there isn't any attempt to cover Bitcoin, talk down of it. I think this is a positive commentary on the currency. So again, goes in line with Jack. Fundstrat Global Advisors LLC. Tom Lee is an analyst there, or he could be higher up. But again, they provided a memo to their clients saying they think that this kind of consolidation period in the market, where we were going down and now it's kind of in like a chop zone, but we found an accumulation floor where, if whales weren't already buying into the market based off of Fundstrat's assumptions, that's where people are starting to buy in. They're looking for those support levels for when price drops. Their orders could hit, shoots back up, you're already in the green, and you don't really have to worry about day-to-day price action from there. So they say, hey, give it another, 150 days, 175 days. And then after that consolidation, sooner or later, we're going to jet up and hopefully find a bull market for altcoins. That could be mid-August, mid-September. Who knows? I mean, again, who knows? Going back to the quote from yesterday, you can do your research and think about what's going to happen and make presumptions about what's going to happen, but at the end of the day, nobody knows what's happening here. Nobody knows. You can't guess the future, but you can at least prepare for it, and that's what they're doing. Peter Thiel, PayPal, co-founder, legend, entrepreneur, visionary, philanthropist. He's long Bitcoin. He's neutral, skeptical about anything else, with a few possible exceptions. He was interviewed on CNBC the other day. The few exceptions are going to be, when you look at all these cryptocurrencies, it's everything that's not Bitcoin is trying to beat Bitcoin. So, there's a couple projects out there that have a particular niche and actually have more value, like Ethereum has these smart contracts that they make to make CryptoKitties a thing. Bitcoin, nothing's really... There's really nothing built on top of Bitcoin, no applications at the time. There's probably a few. I haven't really looked into that as much. But again, there's a couple other cryptocurrencies out there, digital assets, that Thiel thinks are valuable. I agree. I think there's a couple projects out there. One of them being Jed McHale's Stellar Lumens, XLM. Again, McHale thinks that in 10 years, he's not surprised to see if all equities are going to be tokenized on the blockchain. Looking back at what Kevin O'Leary is kind of getting his hands involved in, there is a hotel, New York-based, high-end, luxurious, quality. They're launching an ICO on the blockchain, so all of those hard assets are going to be tokenized. Shares of a coin are going to be issued for $400 million. The total deal is $400 million. A third of the hotel is going to be, third of the ownership of the hotel is going to be transferred onto the blockchain. To these investors, it's immutable ownership. It's real-time transactions. It's really interesting stuff. So in 10 years, let's see where we are. But it's very, very interesting to see how things are taking shape. And again, think macro, not micro. Zoom out. If you're looking at, if you're a trader and you're really biting on all these price changes, This is a speculative market, and until there's actual demand and use cases, everything is driven by demand. The monetary supply for all of these coins is kind of baked into their algorithms, their protocols. So you know how much of the supply, you know how much these coin supplies are going up all the time. It really depends. This price change depends on how many people are buying it and how many people are selling it. That's all it comes down to. So don't get caught up in the weeds of the price action. If you want a better idea of what's going on, zoom out, and that not only has to do with charts, that has to do with news too. Just kind of ignore the day-to-day noise. If something goes up 10%, that's great. There's a really good chance that people are going to short that into the ground until there's another buying opportunity. Maybe they don't. Maybe they keep on. Maybe the market sends it up another 20%. I mean, this is crypto. Anything can happen, and it's kind of wild. It's an interesting ride. But again, like, don't get confused with all this stuff. There's a long, long road ahead. Half of us didn't even know what Bitcoin was 1 year ago to date. I mean, it's kind of insane. So don't really lose sight of things. There's no such thing as free money, even though, also, March Madness is back today. There's going to be spreads, there's going to be overs, there's going to be unders that look like it's free money. I personally don't really gamble. It's just like, I don't know, I'm doing this. But again, like, if anybody does, for our gamblers out there, can't rely on the tilted spread. Like, something's going to happen. UVA is going to get upset by a 16 seed, which is still just like insane if we're really going to talk about that. But again, however, you can't rely on tilted spreads. You can rely on Coinbase. This Dutch-based fintech firm called VI Company, they found a flaw in their Ethereum smart contracts that basically allowed you to, so you had to create a smart contract with a couple Coinbase wallets, and there had to be one faulty one in there at the end of the chain. And basically, these guys found out that if you executed the smart contract and sent money through the contract, it wouldn't execute at the end because there was that one break in the chain with that faulty contract, or that faulty wallet, but the Coinbase wallets would get filled up. So these guys could just pump their bags with this security flaw, do it 1,000 times, cash out, go to another wallet, and then buy themselves a bunch of Lambos. But they ultimately did reach out to Coinbase back in December. It was labeled as a 9 out of 10 security risk, and they did get a $10,000 payout just for kind of being good guys, not liquidating Coinbase and kind of causing a nightmare for them. Alright, so wrapping up with our education, we have the Howey Test. This is basically to determine whether or not something can be classified as a security token compared to a utility token. There are a lot of projects and people in the space in 2017 that launched ICOs claiming that it is not a security token. They were a utility token. But Jay Clayton with the SEC, he's not a dummy. He understands that, look, selling securities, there's a reason that people are saying they're issuing a utility token. It's a lot easier to issue a utility token. There's less hoops to jump through. You can generally get away with it a lot easier. And again, simply calling something a currency or a currency-based product, again, words are wind. That doesn't mean anything. Like, I can say that this is like the Hawaiian Punch. I can say that this isn't water. This is water. Can't believe it's not butter. It's the same thing. Well, it's not the same thing. You can't say I can't believe it's not a security token because it is a security token. So again, like, nice try, but the SEC is onto you, and they're using the Howey Test to kind of figure out what tokens fall into that basket of securities. So if we want to take a walk down memory lane, in Florida in 1946, this farming company, this group of farmers called the Howey Company, they tried to lease land to finance their ventures, just unrelated to their farming business. So they contacted some local farmers, said, "Hey, look, like, the SEC wants to, totally lived there. They want to buy this property and send it out and basically lease it." And these farmers had the expectation that Jeez. Wow. My brain froze up for a second. But yeah, no, they wanted to. They had the expectation that these smart contracts were going to be valuable at the end of the day. So, and they thought that Howey's services, whatever they're doing, were going to increase the value of these contracts. But the SEC stepped in here and they're like, hey, look, this is clearly an investment contract. This isn't going to happen. And it ended up going all the way up the Supreme Court, and the SEC did win. And this set the precedent moving forward for what's considered a security and what's not considered a security. So again, the requirements for the Howey Test, there's generally 4 key points that you have to look at. Number 1, money has to be invested into a product. Number 2, you have to be expecting profits from that investment. 3, the investment is into a common enterprise. Any profit comes from efforts of a promoter or a third party. And if you invest money and expect to profit from another's work, you pass. Dilly dilly. You're a security token. And again, an example of that would be BitConnect, RIP. They clearly were expecting this value to go up from these promoters. There really wasn't much else to it. However, if you invest money into an asset with no dev team, no profit expectations, if you invest into gold, it's not a security, it's a currency. So again, that's generally the same thing as digital gold, Bitcoin, Litecoin, and Dash. There's no developers for Bitcoin, so if you buy into it, there's nobody that's going to check in the next day and say, oh, we have to do this for Bitcoin, we have to do that for Bitcoin. There's core developers, but at the end of the day, Bitcoin's kind of a free spirit. It's open source. There aren't people governing the every move of it. And again, you're not expecting to profit. People are expecting this to be digital gold, a currency that they can use, or a form of digital cash that they can use to transact every day. The same thing goes for Litecoin, and the same thing goes for for Dash. So again, that's the Howey Test. It's more detailed than that, and again, the SEC is taking this on a case-by-case basis. So that's not they could run through all of these and find that a particular quote-unquote utility token or a blockchain project has some other criteria. I'm not entirely sure. I haven't really looked into that stuff. This is just a quick overview so everybody can understand what's going on here. And the next time they see a utility token or a blockchain project, people can kind of look at that and wonder, okay, let me run through the Howey Test and see if this is actually going to be classified as a security by the SEC. So again, that's it. Thanks for tuning in. I really appreciate it. I'm starting to get the hang of this. Plan on doing this every day, Monday through Friday. For our newsletters, if you want to subscribe to the newsletter and get this in real time, check out our website at thedailybit.news. There's a sign-in box right there. You can plug in your email. We'll add you to the list. And generally, the paper gets sent out around 6:30 each morning. If you want to check us out on Twitter, we're constantly throwing content out on there. LinkedIn, again, feel free to check us out. Our Medium, we're adding blog posts all the time. Facebook, the same. So, again, thank you guys. I really appreciate it. And if you like what we're doing here, tell your friends on Twitch, like our stream, share our stream. We're going to set a YouTube channel up with some of this content here to get it out on other channels. But again, thanks a lot, and I'll see you tomorrow on Friday for our next edition. Okay. All right. See ya.